Why don't we go ahead and start our first brown bag session of 2015. I'm Jennifer Lim. I'm the chair of the section, and I'm glad to see some other board members and past chairs here. And I'm really excited to see the people who we've got as speakers today. I'll do a quick introduction, real quick, and then let them get to what it is they're going to talk about, which is how busy are we going to be this year doing transactions and activities like that. Right? Are we all going to hit billable target?
Sure.
Are we going to get home before 10 o'clock at night?
No.
So I'll start with Scott Mitchell, who's the Executive Vice President of Investment and the Industrial Division at Colliers International. He's been with Colliers for many years.
33 years.
And he's got lots of experience watching the cycles in the market, I imagine,
Yes,
going
ma'am.
up and down.
Yes, ma'am.
We've also got, let me turn to his page, Mike Hamasu, who many of you probably
Thank you.
met or seen before, also with Colliers. He's the Director of Consulting and Research. He's been quoted in the Wall Street Journal, a lot of other notable publications, and can really tell us where the market is going. We've got Karen Burkett, who's a Senior Associate in the Office Services Division. So you really focus on the sale of office properties.
And the leasing.
And the leasing
Leasing.
of office property. And then finally, where's Nathan's sheet? We got Nathan Fong, that fellow there. And he's a vice president in the Retail Investment and Shopping Center Division. I'm looking at his resume right now. It says his shopping center portfolio totals over 2.2 million square feet. So
Very
he's
busy man.
got a lot to say too. So thank you very much. Let's just give you a quick round of applause and then let you go.
Thank you, Jennifer. Appreciate the invitation to come speak to you. This has been third or fourth time, or has it been more frequent?
At least the third time.
Yeah. Well, we enjoy speaking to lawyers. It's a joke. So we're going to cover the commercial real estate marketplace. Hopefully all of you can see the screen, and those of you on the phone. It's 50 by 50 feet presentation.
And Mike, real quick, I just got a text from Bill Froelich, so there's been an accident, so he's 10 minutes late, so,
Okay.
but he'll be here.
All right, great. All right, so our overview, we're going to quickly go over our economic forecast that you're probably well aware of, and then go into the investment market and then the other subgroups of Hawaii's commercial real estate. This is what I do every day. Some coins. So is it up or is it down? Heads or tails, right? So the more legitimate economists in our marketplace, State DBED and UHERO, are the two major economic forecasters in our marketplace. As you can see, all the different categories: visitor arrivals, real personal income, job growth, and real gross state product, all fairly healthy in terms of over 1 or 2% in terms of growth. You know, much better than actually negative figures. So their forecasts are very positive going forward for 2015. We use that information actually to try to help us forecast where the market's heading, because everything from job growth to retail sales to contracting sales all impact the real estate market. We're going to start off with the broadest category, which is the investment marketplace. We tend to believe in the cycle theory. You know, things are good, people start building, people invest, and ultimately the market peaks. Overbuilding occurs, the market starts to sink, and then you end up going up and down. Well, we tend to peg most of the real estate cycle in terms of property types in the expansion mode. Expansion mode is vacancy rates are declining, rents are starting to escalate, and you're starting to see development. And if you just look outside the window, you see a bunch of cranes, you know that multifamily or condo development is on the upswing, right? Some of the things that we want to talk about is on a broad scale. Over the last 15 or 20 years, Hawaii has been kind of very similar to the mainland in terms of investment cycles. 30 years ago, we were kind of isolated. What happened in Wall Street, what happened in California, didn't used to impact us as quickly. You know, within a year or two, maybe you would be impacted. Well, what's happened recently is that when the financial crisis hit, almost immediately Hawaii was impacted. So on a national scale, were very similar. Mortgage debt, which is starting to increase in 2013 and 2014, is representative that capital is flowing back into real estate. So Jennifer mentioned, are you guys gonna be getting busier? Oh yeah, money's flowing back into real estate, so that's an indication of where the capital is going to. From an overall perspective, this is delinquency rates in banks. You're starting to see a significant drop in delinquency rates. Well, in the middle of the recession, you know, a huge amount of real estate went under. Loan defaults were all over the place, and as a result, you know, people are losing their shirts in real estate. Well, luckily, those loans are better able to be recapitalized and refinanced, and as a result, the delinquency rates have fallen to levels prior to the recession. So what you have is capital flowing back into their markets, delinquency rates are declining, and the last thing you want to see is in 2014, NAREIT, which is the National Association of Real Estate Investment Trusts, tracks funds in real estate. Well, the returns on real estate was 26% in 2014. So now you have a culmination of capital flowing into the marketplace, better performing loans, and real estate returns are higher. So you being the astute investors that you are, what do you do with your money? You look at the places that are kicking off the biggest returns. You're looking at, okay, is the performance better? Am I anticipating the economy improving? So ultimately what you have is a bunch of positive factors. So at year-end 2014, in Hawaii, we hit a new record in terms of sales transaction volume, $4.57 billion. Drum roll please, new record is established. So, just knowing that lots of money is flowing in Hawaii, you've seen a bunch of huge investment activity from hotels to industrial parks to shopping centers, all trading hands. You know that there's a lot of mainland money flowing into Hawaii. Now, part of it is because our returns are actually fairly good. What we have here is cap rates in the 6% range. If you went to places like New York, San Francisco, Los Angeles, Boston, Chicago, prime property cap rates are actually well below 6%. You're seeing things in the 4.5% to 5.5% range. So from a secondary or tertiary market as Hawaii is, we actually have slightly higher return rates in terms of capitalization rates. For those of you in the back who can't see, this red bar indicates the resort. Out of the $4.6 billion of transaction volume, about 37% of that dollar volume was devoted to hotels and resorts. 31% was devoted to retail. In a typical market, you would think that Hawaii is known for its prime resorts. Normally about 50 to 60% of the sales volume is in hotels. Well, Nathan, you want to say why retail was so popular in 2014?
Well, you know, for retail, so a good example is, you know, a year and a half ago we sold Pearl Highlands Center, which was about a $141 million transaction. And, you know, that buyer saw the value in the fact that it was a steady asset. You know, there was, you know, some top performing national tenants within that center, and it had some room to increase the value. So it was just steady with a lot of potential upside.
Why are our cap rates higher? You know, I know in residential they'd be lower than the rest of the country, I would think, and in fact the apartments showed a much lower cap rate. Why would our commercial not follow that? It seems like part of the reason is you get good capital appreciation here, and so people count that into their total return. Why is that not the case in other commercial segments?
There's a lot of competition on the mainland, especially in the primary markets, between institutional capital. And so that competition is driving cap rates down right now. We're starting this year for the first time in a long time to see institutional capital look at tertiary markets. So we'll probably see a little bit of competition occur out here and some cap rate compression. That back down more closer to the mainland numbers, but for now it hasn't been that. So our cap rates have stayed a little bit propped up at this point.
Can I just ask a follow-on, but why is there that difference then in apartment?
You know, again, Our apartment market here is a very different apartment market than the mainland apartment market. We don't have, 500 unit, we have very few of them anyway, 500 unit garden apartment projects here in Hawaii. And so what we're dealing with is, little 2-story, 12 unit Holotai walk-ups. And so it's a very different product type.
And then the state has already mentioned that there's a severe shortage in rental housing here.
Right.
And that's what's keeping our cap rates low, because small investors like targeting those types of investment opportunities. That's why our cap rates are sub 5%, 4.4%. If you're on a mainland, those are higher, 5.5%, 6% for apartment investment
But
opportunities.
it's also interesting, so you may have heard of Forest City, and they're doing their 500 unit rental apartments in Kapolei, and that's gonna be the first project of that size that's brand new inventory that we've seen in a long time, so it'll be interesting to see what
And
happens.
just so you know, the seller of that land is also participating in that project, so they see the upside as well. James Campbell Company will be participating in that project with Forest City.
This graphic indicates where the dollars are coming from. So sales volume wise, out of the 4.6 billion, 82% of the dollar. So 80% of, quick, what's the number?
Well, 8 times 4.5, so.
$3.5 billion
3.2.
came from offshore. So institutions and international are bringing a lot of dollars onto our market, or acquiring a lot of Hawaii property. But if you deal with a lot of owner users or local buyers, you're seeing that transaction count wise, out of the 265 transactions in the year, 70% were to local investors. And what we did was a quick calculation of the average price. The average price for an institutional investor here, so of this 82% sales volume, $50 million average price. The local guy, $5 million. So depending on whether I see that positive or negative, but basically what we're seeing is a lot of small investors, the local guys are buying the smaller properties here, focused on apartment buildings, warehouses, strip malls, office condos and so forth. Whereas the big guys are buying the hotels, the regional, the major shopping centers, and office properties, right? So here's a list of some of the major transactions over the past year. Top of the list, Royal Hawaiian Shopping Center, $697 million, prime jewel in Waikiki.
And just a quick note on that, because JP Morgan was the person that bought that, and JP Morgan's not necessarily been in this market before. They are one of the larger institutional capital players that's looking now to tertiary markets for better return.
And that was a leasehold transaction, by the way, not fee.
Good point. And then on this list, actually, Nathan mentioned Town Center in Mililani sold for $227 million. So an interesting portfolio. You're talking about apartments and rental housing. This combination $300 million portfolio, Kalaeloa rental home portfolio and Waena apartments sold to Dick Cushman's group here. And then what's the other group that acquired it?
I can't remember.
Colony Capital, was it?
Yeah, Colony.
Colony Capital sold it, right? Sold that. And then one of our favorite transactions, which of course, I don't know if you know anything about this. Colliers actually sold, assisted in the sale of the Kapolei West land, which is from 177 acres of prime industrial zone land on Kapolei.
Pretty much all that's left in industrial land available for the next 10 years, and that was bought by a Chicago-based private equity fund.
All right, so just a quick summary. As we mentioned, capital's flowing back into real estate. We have very strong fundamentals from a market dynamics perspective. Local investors continue to remain active. I mean, if you're getting a fraction of 1% on your money market fund in the bank, you can get a 4 or 4.5 or a 5% return on a real estate portfolio or real estate acquisition. That's why we're starting to see money flow back into real estate. Right? And then, of course, do you guys want to mention any of the major international acquisitions, like the land out in Kauai by Rainwood Capital Group, International Group?
China.
Yeah, China. And then, of course, we had Zuckerberg buy hundreds of acres out in Kauai as well. So that island is going to be like Lanais, Ellison, I guess, and a lot of big billion-dollar portfolios. And then, of course, development activity surges. So we're going to talk about the retail market, and I'm going to throw a bunch of heavy loaded questions to Nathan, and he'll answer all of them, right? Hello everyone, this is Bill Froelich.
Very sorry. Left Waikai at 11:07. So they are repaving Kalanianeole, and it is raining, and people cannot drive in the rain, and there's an accident and a moped that fell over. So, hence, I am the ugly duck.
Make him feel welcome. He is one of them. He's actually a lawyer as well. Okay. All right. So overall, the retail marketplace, vacancy rates of 4.09%. Very tight market conditions. We're seeing minimal net absorption. But what's funny is that earlier in the year, when Price Busters closed, that was a 90,000 square foot vacancy that was added onto the marketplace. So if you take that off of the market and you add another 13,000, over 100,000 square feet of absorption or growth actually occurred in the market despite that, right? Any comment on any of those Price Buster spaces now?
Yeah, so, what you're seeing is a transformation within retail. A good example is Blockbuster Video, how everybody can just get their movies on demand now. So that left, multiple vacancies of 6,000 to 8,000 square feet plus. A lot of that has been re-tenanted. So Kahala Blockbuster, we just did a deal there, and that a credit union's going to be taking that space. We had another Blockbuster Video out in the YPO, and that ended up being a medical imaging tenant. So that 5,000 to 8,000 square foot range, type of user, there's not a whole lot of that type of size ranges for retail. So what we're seeing is it's turning into non-traditional retail. The guys who want to have that size and want to have a presence within a shopping center.
All right, some of the economic variables that impact retail, of course, air passenger arrival counts, slight decline, but we still had about 5.2 million air passenger arrivals here in Hawaii. Median home prices for residential still on an upswing, $690,000 at the end of the year, December. Sales counts are actually lower because available homes aren't out there. I mean, you have a shortage of homes out there for sale. And then retail sales. We hit another record in terms of retail sales volume. Somebody's out there spending a lot of money on stuff, right? So all of you who save money on not having to pay for gas, you guys are out there spending money buying other stuff.
Or things are more expensive.
Yeah, inflation, that's another point. So what we're seeing is that we're seeing all the components of the retail market, strong tourism volume, appreciation in home values, and now retail sales are all on the upswing. And of course, we just saw a news article on car sales, right? Another uptick in car sales. So capital or hard goods are starting to be invested in by consumers. Asking rents, as a result, jumped by about 8.7% from $3.35 average up to $3.64. So it's a sizable jump in 1 year. Are you seeing that in some of the shopping centers? You're starting to see rents increase?
So we're seeing rental rates increase because the demand for space is getting greater. Not like it was back in, I hope that wasn't me. It's not like it was back in 2007 or when we were at the peak where there was 5 or 6 offers negotiating on one space. But it is fairly aggressive out there still.
I guess we're not going to be on camera.
I broke the camera, sorry.
All right, Colliers does its own indexing. What we try to figure out is we have a huge portfolio of retail shopping centers we manage, and they report sales to us. So on a monthly basis, we track that. And this is actually an indexed tracking of retail sales per square foot. So in 2009, when we start this, we tracked that by 2014, it was actually about a 7 or 8% jump in sales. So actually a positive sign that retailers are actually generating additional sales and are much better off than in the middle of the recession. So overall, our forecast for the retail market is vacancy rates will drop to low 4%. And we'll post some positive absorption. We're not seeing any new developments coming online in 2015 yet. But what we're seeing is 2 million square feet of development activity planned 2016 and 2017. Much more confidence in the marketplace and national tenant expansion occurring in Hawaii. Any comment on some of the developments underway, Nate?
Yeah, so, I mean, normally when a development is planned, you know, you're still looking at a delivery date of 2 to 3 years away. A lot of it is happening out in Kapolei. You may have heard, you know, Kapolei Commons decided to go the outlet shop way, and they got their movie theater deal, so that's happening. The Bartolo is finally happening. They got their Macy's deal. All the Gap brands have signed there. Groundbreaking is actually going to start next month, and that has been 5 years in the making. And what's really happened for Kapolei is, you know, several years ago there was, you know, multiple developers trying to do the exact same type of shopping center. So the tenants couldn't make a decision on which shopping center they're gonna go to. And so, you know, it finally turned out the Barlow is gonna be the major regional center, and Kapolei Commons is gonna be the mid-box and the large box, along with the outlet shop. So everybody's kind of determined their niche and is sticking to that niche, and so now the tenants can make a decision on where they're gonna end up going, so, which is great for everybody.
Any questions on retail before we move on to the next topic?
Nate, how about, can you tell us some of the new retailers that are coming to Hawaii?
Yeah, so, you know, obviously, you know, we have the Walgreens and the Longs, and that's landed. That's old news. You do have, you know, the pet stores that have still started to expand, and Petco is aggressively expanding. PetSmart, you know, they opened their one location in Mililani, and they just got bought out by a private equity firm. So that their plans for expansion is kind of on hold for now. You know, obviously you've seen TJ Maxx has been aggressively expanding. So the discount retail in Hawaii seems to do very well. And you know, for a lot of these retailers, they'll come down and they'll sniff around, and it'll take them 5 or sometimes even 10 years before they pull the trigger on Hawaii, just because our rental rates are so expensive. And so, you know, for us, we really have to educate them on, okay, your rental rates are going to be 3 times the amount of a mainland store, but you're also going to be doing 3 times the amount of volume. So that's where, you know, our job is very important. So.
Where do we get Trader Joe's?
Not for a while.
All right, the office market. Of all the property types that we cover, the office market is
not very sexy.
so that's why we brought Karen. All right, so the office market has been kind of stuck in neutral for a while. We have vacancy rates of about 13%. Actually, a little bit of difficulties in terms of what's happened or volatility that's happened in the last year or so. We had a bunch of large tenants buy their own facility or relocate and move to a renovated site. So for instance, Queen Emma Land Company moved from Ali'i and went to their Queen's Hospital facility. You had NOAA, which is the National Oceanographic Atmospheric Administration, moved to Ford Island, and that was a significant decrease in the private sector office market. So you had this volatility occur, and that's why at year-end 2014, we actually posted about 78,000 square feet of negative absorption.
We also had Office of Hawaiian Affairs, who left the Kapiolani area, and they bought Gentry Pacific Design Center, which they renamed Nalama Kukui. So they left about 45,000 square feet and renovated the top second floor, a big portion of the second floor at Nalama Kukui, and moved in there. They're probably at about 35,000 square feet there. So.
All right, so overall we look at the economic factors. Unemployment's very good here on Oahu. It actually has dropped for the 3rd consecutive year. We're at 3.4% unemployment rate. nationally, I think it's like 5.6 or 7% at this point. Office job counts, we actually compiled the types of businesses that use office space and call it office jobs. Actually posted a nice healthy jump. We're up to 94,000 jobs, and we're almost reaching where we were at the peak in 2005. So we kind of lost all those jobs and we kind of filled in all those positions again. Office rents actually went up, which is kind of weird. You'd think it's counterintuitive that vacancy rates are at 13%, negative absorption, which means we lost occupancy, yet rents are going up. Well, because this is an average of all the submarkets on the island, if you ever tried to find space in East Oahu or in Leeward Oahu, you'll know that vacancy rates are sub
4%.
yeah. So ultimately, rents there are well above the average market rate. And when you average everything together, you end up with the increase. But if you're only focused on the CBD or in the Kapiolani area, you got actually rents that are kind of flat.
I have a question. You know how you were talking about the retail has changed, and, mainland big box guys are coming in. Have you seen a change in who's going into the office space as a type of office?
Yeah, although the job market is really healthy right now, we're seeing a lot of existing tenants downsize or right size and work in smaller spaces, right? So a lot of law firms are doing that, engineering firms, CPA firms. So instead of everyone having big private offices, maybe like the senior partners have the private offices, and maybe there's more breakout rooms or conference rooms, but more collaborative space. But that total footprint is shrinking, as opposed to a 20,000 square foot law firm. They're being able to downsize or right size, is how we say it, into like 15 to 16,000 square feet. And then there's the new tenants coming into the market that are associated with the rail, right? So we're seeing more architects and engineering firms, contractors coming into the market. So, and they're, go ahead.
And I see, continuing purchasing, like American Savings Bank's buying theirs. That's going to be a continue of that trend. And then these rail guys are taking up a fair amount of space now in downtown, I think, and they're going to go away after a few years. So I'm wondering, I saw your office lagging that thing. I don't know if it's going to have a shorter rise to this time.
So, and that's an interesting point. So just in January and February of this year, so just like the last 6 or 7 weeks, we're seeing like Douglas Emmett and Pacific Office Properties. The big, large landlords here in downtown. They're all diving down on their base rents. They're being more aggressive on their base rents, more aggressive on their tenant improvement allowance, giving more free rent, because they're seeing that at some point this is going to happen. So they're trying to increase their occupancy in their buildings now to anticipate exactly that.
That's a good point. In fact, all likelihood the volatility will continue, because if you have ASB who's going to build their facility, they're going to relocate a lot of their people, and buildings in downtown are going to be impacted. You got HECO that's going to be acquired by NextEra if that goes through, and they secure a huge amount of office space.
They're in about 300,000 square feet of office space right now, HECO, mostly here just in Central Business District.
So 2015 year end, or 2016, 2017, the ASB building gets built. 2018, that's 2 years. They said that they're not going to touch any employment at ECO. So you've got some volatility that's likely to occur going forward. In terms of rents, what we also do is a regression analysis actually posts where actual rents were generated. So the base rent is actually on a slight increase for downtown. So at this point, we know that might change because of all the volatility that's forecasted in the future. But right now, rents are hovering around $1.50 average right now. An interesting thing, and we just saw a report by one of our competitors talking about operating expenses, and you already know if you drive a car that uses gas. So the price of gas goes down. 25% of the building operating expenses, office operating expenses, is electricity. So if the cost of gas goes down or the oil prices go down, the hope is that you as a tenant will be positively impacted because that operating expense should go down. In fact, this has been historically increasing about 6% a year. You know, in the last year and a half or so, it's only gone up by 1 penny. So, you know, that's well below the average annual increase on a building operating expenses.
And, you know, the landlords in town are already looking at dropping their CAM rates for 2015 just because of that. So, yeah, the big landlords, especially here in Central Business District, are, you know, if they were at $1.34, they're estimating at maybe, you know, $1.25 to $1.30. So that's good news.
Now this squiggly line is our way of doing our own index for the office sector. We actually track tenants looking for space in the market versus the supply, which is the available space. In the last couple of quarters, we saw a slight downturn. So often that, you know, it might be reflective of what's happening is that fewer tenants are looking for space, and in about a year when they do secure a lease, you know, there's fewer people looking, so fewer people are going to sign a lease. So ultimately, what we have is softness anticipated going into 2014 because it's a year out. So our forecast, vacancy rate's gonna kind of stay where we are for 2015. Slight positive increase, you know, maybe 75,000 square feet of positive absorption in 2015, but that's contingent upon all the unusual happenings that might occur in the next year or so. So a quick summary. You know, as we mentioned, volatility. You know, we've seen office job growth grow for the last 2 years, so that should positively impact the office market. But as we talked to Jennifer about the trends, you guys aren't using as much space. In 1980, you guys are using about 250 to 275 square feet per person. You know, and I'm talking law firms, right? Right now, you guys are probably down to 160 square feet a person. So, you've locked off 100 square feet somewhere, and it's probably all your libraries and your secretary staff and what have you guys been downsized. So that's impacting the office market. So any final questions for Karen before we move on? Office market. So we're all going to invest in the office market.
No.
You know, kitty corner to the post office, there's that old state building, it used to do building permits. Are there any plans for that space? It's just boarded up right now.
Yeah.
There's significant amount of asbestos in that
Is it?
facility.
Yeah, so at one point they were saying it was going to cost upwards of $5 million just to get rid of the asbestos. So I know there's been a lot of back and forth. There's no parking associated with that building. So it's kind of been a big black eye, but it's been vacant for quite some time. So no plans as of yet that we know of.
Bring it down.
Oh, just to tear it, or to tear it down?
I'm just wondering if it's gonna be torn down.
Yeah, I haven't heard. Have you guys heard anything like that?
I remember it was under the Abercrombie Association or administration that they mentioned that they were going to tear it or renovate it and bring state jobs into there, but
Didn't
that's
happen.
That'll
changed.
probably happen eventually, but I don't know that they'll tear it down.
But we recently just closed on Clifford Center, so that was exciting. So Tissue Genesis Tower, if you guys are familiar, it was in escrow and then fell out of escrow and like back and forth for probably the last maybe 2 years or so, maybe 3 years. So we just closed on that just a couple of weeks ago. So a local guy, fella ended up purchasing it. So
That's good.
yeah.
And make sure that if you have any need for expansion space for your law firms, go to
That's a good plug. Thank you, Mike. I'll pay you later. I'll give you a percentage.
All right, good. Okay, the third and final market is the industrial market. And this is a very interesting market. I don't think you'll ever see a warehouse in Hawaii like this.
That's really good. Where'd you get that picture?
That's crazy.
Yeah, just a little note, there hasn't really been any new speculative warehouse development in our market in,
Probably 6 or 7 years.
okay, all right, so it might have, just like.
I mean, there's a little bit. I won't say none. There's been a few, but very, very small.
Industrial market, the tightest market in the entire country. We're at 2.1% vacancy rate for industrial warehouse space here. And we just posted a third consecutive year, over 260,000 square feet of positive absorption. At this point, you're basically stumbling over trying to find a space for these tenants, and you wanna comment about what you're up to, Bill?
Golfing, because 2% vacancy rate.
Yeah.
So
Fishing, golfing.
Our industrial base rent average also is 3 times the national average. So when I was driving in here and thinking, what would I share with bar members that were practicing in real estate? You know, when I receive lease comments and I look at them and people want expense stops and they want tenant options and they want, you know, renewals at 90% of fair market value, it's a complete landlord's market. So equilibrium is maybe 7%, right? A 7% vacancy would give a landlord and a tenant equal bargaining power. Even in our recession, we reached barely above 5%. So we haven't had a kind of an equal bargaining state since I've been in the business in over 10 years. So it's an extremely tight market. When tenants are looking in the marketplace, please advise your clients, and you need to be starting a year or more out and engaging a representative that can help you understand the market. And you know, I get requests, I need 20,000 square feet in town with loading docks in the next 3 months. I'm like, well, that's California. It's over there on the left. So it's an extremely tight market, and Scott and his team that are controlling a lot of the land out there that are bringing out at retail prices and retail construction prices, we need a 30% increase in rental rates to support just general URI buying land and building. Scott and the developer that took down that land is probably going to bring some spec stuff to market that can make some of that time gap shorter.
Yeah, we're in that discussion now about them doing the spec development.
Yeah, so it's a really tight market. You know, the roof only leaks when it rains. That kind of market. It's tough to be an industrial right now.
And that's because I assume because everyone wants to be downtown. And it seems like there's plenty of opportunity for development on the west side, but
There is and there isn't. We have a very low vacancy rate in Kapolei with existing product, almost as tight as what we have in town. And I preface that it's not almost, but it's not 5%. I mean, it's extremely tight. And to get a building out of the ground is an 18-month, 24-month commitment. And if you want somebody to build a suit for you, they want a 10-year plus commitment and a 7% return or more. So you take that $1.30 that it costs them to build, and you add on to that, the tenant says, okay, so you're telling me I have to pay 40 or 45% more than what I could rent if I could find a space. It's hard for them to bridge that gap. It's hard for them to get that kind of financing.
And not only that, but at the downturn, there was 3 or 4 parks that were slated to be brought online at the time, and within a year of that, of 2007, 2008. But the downturn threw those projects into turmoil, and obviously many of them went bankrupt, and so the ownership has changed hands. New capital has come in, taken over these positions, but it set the timeline back 2 to 3 years. So we're going to be bringing on probably 54 acres by August of this year, and that'll be the first new development in industrial in a very long time. The former raceway that was out in Campbell Industrial Park, that has been out to market. They're about 65% sold during this period from the downturn to now. And so for all intents and purposes, there's been no ability to build. If you look at all of the adjacent industrial parks around the island right now, the available land is zero. There's, virtually maybe one in Milltown, one lot in Milltown. You can talk to the rest of them. So
Yeah, I mean, and even if you take 50 acres and you can build 50% on that, and that whole thing got absorbed and built, that's 1 million square feet of product, right? We just had an absorption of 250. I mean, we have such a pent-up demand. It's like what we experience in the residential market, right? It's above asking, no free rent, no TIs, take it or leave it. I got from Nathan when I first got into business my favorite adage: you have 4 lease comments and 4 only. Just pick 4 comments. Whatever, just you have 4. Right? But it's really tough, and I understand you guys have a job to protect your clients, and most of the time we find a way to get there. I just caution in the industrial arena against really getting into the indemnities and that, just really drilling down, trying to be a deal maker to the best of your ability while still protecting your client.
a lot of times we're getting representatives from mainland areas coming out and trying to negotiate these leases, and they're being very aggressive, trying to be very aggressive, and the response is no, 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 and a lot of times these deals fade away and go away because people just don't understand, you know, this dynamic that we have right now in the industrial marketplace is incredibly tight, and as Bill said, you know, it's very, very, very landlord oriented.
All right, I'm gonna jump in here and make sure we finish, because these two could talk about industrial
All day long.
forever. I learned about all this stuff about
I
it.
had to wipe my,
You know.
my $30 shoes down before I came in.
Okay. So anyway, let's go through the economic indicators, and then if you want to talk to them separately, find your own conference room. Board it up, put some padded walls on it, fight your way out. Anyway, here we are. We have wholesale distribution. The reason why we threw this graph up is because wholesaler and distributors constitute a large percentage of the whole warehouse users. So yeah, record sales volume for them, which means that, of course, they're filled to the gills with goods and materials that have to be warehoused. As a result, that's excess demand or increased demand. Contract-based sales, what's kind of interesting is that there was a slight decrease in construction revenues. But if you look at permit volume, we hit another record. So maybe there was a slowdown mid-year 2014 in terms of construction activity, but permit volume has hit another record. So what we're anticipating in 2015 and 16 is an increase in construction activity. So that should benefit you as real estate lawyers if you're working with new developments and on the horizon. That will be additional projects coming up in the near-term future. We're on our third year of rental rate increases in the industrial market. It's spiked 20% in the last 3 years. We're anticipating probably another 15 to 20% increase in this year alone in terms of rental rate increases. So if you're a warehouse or you represent warehouse tenants or businesses, just be sure that, like Bill was mentioning, you start negotiating leases soon because they're anticipating rents to start to increase at a rapid pace.
So, and that means lock your tenants in for the longest term that they can support.
We throw up the regression analysis graph because I like that. I'm a statistician and I like to do math stuff. So anyway, these are actual deals. So it corresponds to that increase in asking rent. So that's all I threw it up there for, just to make sure that makes sense.
That's Bill's deal right there.
All right, we talked about land values. Just a quick summary. If you were to try to find I-2 zone land in urban core, we're talking Kapilano or Kaka'ako or anywhere from airport here, we're talking almost anywhere excess of $100 a square foot, $100 to $125 a square foot. And if it's vacant, it's probably worth more, right? So, not to plug you or anything in terms of your Kapolei land, but if you look at Kapolei land's only $22 to $35 a square foot. So
Really?
that's where the availability is.
22 now?
No. No, Michael.
Okay, well, I'm trying to help some of these guys buy land
32.
out there. Okay. Before I open up the floodgates, you guys want to talk about TOD and the impact of the industrial marketplace? Okay, 30 seconds.
I mean, it's not, you know, it's not just TOD, it's everything, but TOD has been a big impact on the industrial marketplace because a lot of the stuff that's getting displaced is industrial. It's also going to be changing along the route, it's going to be changing industrial zoning to TOD zoning. And so, I mean, if you want to jump in at any time, you can talk a little bit about that, but it's a continued push away from industrial. We're seeing it in terms of condominiums, we're seeing it in terms of master plans like Kamehameha Schools, Bishop Estate, and Kalihi. It's all turning to retail. So the pressure on the industrial market is extreme right now. Is that 30 seconds?
Exactly.
You're in total agreement with what he said.
I'm in complete agreement. I mean, Kaka'ako industrial is going to be a thing of the past, and it's just move west, young man.
You heard it. Okay, manifest destiny, move west. Industrial market summary, tenants are scrambling, trying to find any kind of space out there. What we have is, although currently speculative warehouse construction is not anticipated, I mean, he mentioned that midterm horizon, we'll probably see some new warehouses being built. Land values are anticipated to rise. So as a result, buy land now. Is that a good plug?
It's a good plug.
And, by the way, West Oahu land becomes available for sale. You know, my presentations are supposed to be so marketing oriented, but you know, when you talk to agents and brokers, that's all they wanna do is sell their product. So anyway, that concludes our presentation to you. If you have any specialized questions or difficult questions, please direct retail, office, industrial, investment to our panel here. Thank you for your attention.
Can I ask one question? We were up at Plaza having lunch and looked out toward Pearl City, and I was so amazed at the number of solar panels for voltaic energy. I guess they're voltaic energy panels. Does that become an issue when you're working with your clients for your industrial and your commercial spaces, that they look and ask, do we have any referral of more electricity because of the voltaic?
In our business, landlords who have installed PV and taken the tax credits are selling back the electricity to the tenants at market value. So
No savings to the tenants.
you might be able to negotiate that after you get none of your other lease comments ready. 5% off or something, but no, yeah, basically, it's in the landlord market like we're in. The landlord just says, hey, look, I have PV, the rest is connected to HECO, you buy what I produce, and other than that, you drop from HECO, and you're a green company now.
And I'll comment that that's in the case where it's a landlord and a tenant and the landlord develops the solar. There are cases where, and you've probably seen that when you look out the window, where people own the facility and the tenant themselves is putting the solar on the building and taking the benefit.
Scott or Bill, could you have any comments on Neighbor Island industrial property? I mean, I imagine it's just that much smaller of the market, and is the demand even higher?
It's hard to get a lower vacancy rate than what we have. Kauai is an extremely low vacancy rate community. I mean, there's 60,000 people in a very small amount of industrial. Maui, having 300,000 people, has several defined industrial areas, and Alexander and Baldwin just brought out to market Maui Business Park. Maui Business Park Phase 2, so if you want to Google that, you can just, Maui Business Park is the website. You can get on and see some of the raw land that is sold over the past year that's in contract now, and some of the momentum that's happening there, which is a good question, because when things get very tight here on Oahu and people have capital, they start to think, where else can I place it? What can I do with my money for my businesses on outer islands? So yes, but that's probably coming more than it has occurred so far.
Maybe with the TOD squeezing things that much tighter here.
I don't think people will fully relocate their
Yeah.
industrial businesses to other islands.
No, they won't. If they have needs on outer islands, they're already there, or they're on their way, and it's a small amount of people. But the investors who buy industrial real estate, Bill's absolutely correct. They'll start looking at some of the outer islands at this point. When you start seeing lands of $125 a square foot here, yeah, people are going to start looking elsewhere.
I guess sort of a similar question, are things gonna jump pretty soon around the corner to Waianae? Because everyone talks about the west end being Kapolei, but now A&D has bought the mall out there, and I don't know if there's gonna be greater expansion. I would think even industrial and other uses out there would increase.
You know, I don't see it anytime soon. We've talked about this, whether it'll turn the corner or not, but the actual infrastructure is just not there with kind of a two-lane road for all intents and purposes. So we look at, you know, a horizon of 5 to 10 years, and I don't see it turning the corner. There may be spot cases where people may go out there looking for a deal, but they really have to be able to occupy out there and make it work for themselves. Kapolei is kind of the end of the road, and everything else is infill from now on, probably for the next 10 to 15, maybe even 20 years.
Yes, I mean, Scott has 50 acres now, but he has 250 acres right
Just
behind it that is through the that is going, it's entitled now?
It's being entitled right now.
So he's-
And I assume you're gonna move up H2, they will move up H2 that direction along the freeway before they come around the corner.
Gentry has a little bit of an expansion area going on. My guess is it's gonna be more mixed use type stuff, the bulk of it, but their industrial park will expand a little bit. Ho'opili will have a little bit of industrial, but it'll be light classification, light industrial, and probably IM yes, IMX zone. So that's real light quasi-commercial usage, but no new real heavy industry, you know, for the typical warehouser or manufacturer other than Koppelman.
A small, I know I talk a lot. A small bit of perspective, we have 39 million square feet of industrial product on Oahu with 1 million people. San Jose, 1 million people, 400 million. In a place like LA, 1.5 billion square feet. So we are so supply constrained. I mean, it's just like residential. It's everything transfers, right? There's only so much rock. It's all we got to crawl over one another.
Have you folks seen any trends in foreign investment? You know, foreign money's flowing into real estate.
Yeah, we are. We are actually seeing Chinese, and we're actually seeing additional Korean monies. Japan continues to invest here. The former are Chinese and Korean are typically more focused on being a part of a fund that buys certain classifications of assets. We haven't seen it come down to the individual investor yet, so to speak. But yeah, I mean, we are. I mean, you saw in the article just today, there's a lot of Canadian buyers on outer islands right now, condos and things on outer islands right now. We'll continue to see foreign investment here because capital flow out of Asia is going to continue to happen. There's a lot of wealth being created in China and all of Asia right now. So we'll continue to see investment come this way. And it'll probably get a little bit more intense in the years to come.
The U.S. tends to be a safe haven when there's volatility in Europe and Asia. And, you know, the Association of Foreign Investment in Real Estate, they do their own study, and they said of all the investors, over 50% said they're going to invest in the U.S. Hawaii benefits just on our proximity to Asia because of that.
It's also in chase of yield. When you look at bond yields in Japan, you know, and around the world, you're starting to see negative bond yields pop up. And so, I mean, that chase for yield is going to lead here eventually.
Do you see any Russian money coming? Russian oligarch getting out of the country money, like in New York City?
Or Europeans?
You know, probably, but I haven't seen any yet.
Nothing.
I
Nothing
bet
I'm aware of.
the East Coast of the U.S. would see
Yeah,
Yeah,
more.
New York,
more
New
interest
York,
in that side.
and the East Coast probably hasn't come this far
Yeah,
yet.
we haven't seen too many Russian visitors fly over here to enjoy our sun yet, so maybe that's why.
You know, we're bringing Airport Center, you know, the building over by Airport, the only traditional office building over by the airport with the whale, right?
Oh, yeah.
So Airport Center, we're bringing that to market next week, Monday. So that's going up for auction. So Monday, Tuesday, final is on Wednesday. And so we've got a bunch of people that are signed up within the auction. We probably have 8 or 10 that have verified their funds, but most of those are local interest. So that's been
So no Russians in there?
no Russians.
No Russians.
No Russians that I saw as of this morning, but mostly just locals, which is nice.
One thing that's definitely changing, when you think auction, you think distress. It's definitely not the way some of our assets are trading hands. Some people see auction as a more transparent process, and so there's not distress, it's a way to actually receive more interest, and some people prefer to bid in that manner. You do wine, I'm all right.
Yes, and you know, going back to what you said about Waianae, so you know, obviously A and B purchased that, and you know, they understand what it is, and when they purchased it, what it is. It's a community center, 12 miles away from Kapolei, and you know, when we agreed to take on leasing and management for the project, we looked at it and said, well, the timing seems about right. It's going to be a work in progress. There's non-traditional uses that are already in there. For example, we have a 20,000 square foot church. And we looked at that and said, you know, could we replace it or could we put retail in there? We probably could. But what does the church do for the community, and how does that work, you know, for the center? And can we build upon that synergy? So in certain cases, for certain shopping centers and certain areas, you know, it does make sense where we're okay with non-traditional use. I mean, Waipio Shopping Center, we have a church in there. It brings in traffic during Sundays. The parents drop off their kids in the morning and the evenings, and they service the restaurants. So, you know, it's all about the synergy and the characteristic of the shopping center within that trade area.
Anyone have questions? Should we let these people go after a really great presentation?